So you received a notice from your insurance carrier saying they're going to perform a general liability audit. What's an audit and what does it mean to you? You have questions, we have answers. Let's get into it. A general liability audit is where an insurance company compares what actually happened during a policy term compared to what was estimated that would happen when you first got the quote for the insurance. General liability policies are based on different things depending on the type of risk. Things like restaurants and retail stores are based on sales for the most part. Contractors and service type businesses like janitorial are based on payroll. So since you have an idea of what your sales or payroll might be at the beginning of the policy period, but then at the end it might be very different, the insurance company has the right within the policy to perform an audit and compare what you estimated to what actually occurred. And that's a general liability audit. So what are you going to need in order to be able to get through the audit as quickly and as smoothly as possible? Well, it's basically financial data. You're going to need sales figures, you're going to need payroll figures and the documentation for both, so things like your taxes or maybe the employment tax forms that you're giving to the IRS or to your state. Also, and really important, especially when it comes to contractors, you're going to need proof of insurance for the subcontractors you hired throughout the year. Reason why is because if they don't have insurance, most policies will want to charge as if they were a part of your business, not an independent or a subcontractor. The reason this is important is because based on the estimate you initially gave and what you have at the end of the year, and if subcontractors didn't have insurance, all of these could cause your insurance premiums to go up significantly, not just on your current term, but on the term that's being audited, because you see an audit is done after a policy has expired, and they're checking to see if the information provided at the beginning matches the actual information that occurred at the end. And if there was more risk than what was originally estimated, the insurance carrier is going to charge you the difference for that risk. There are some best practices that you can do at the time of the audit and during the year that will help make sure that the audit information is accurate, meaning you won't get charged more than the risk that you actually had. Probably the number one of those is that the person who's involved in the day-to-day operations of the business should be involved in the audit process. The reason why is because if someone who isn't aware of how different employees work, how different sales are attributed, the figures might be put in the incorrect slot. And occasionally what will end up happening is that more payroll is attached to a higher class code or more sales is attached to a higher class code. Class codes being the risk that's defined in the insurance policy and it's being charged for as the premium. And then all of that additional payroll that wasn't classified appropriately ends up raising your premium. Also, there are times where the subcontractors have provided the proof of coverage, but because people weren't aware of where that was, how that contractor provided the information, and that certificate of insurance isn't given to the auditor, then you get charged for that, and you want to make sure that you're not paying for more than what you actually need. If you are going to have a third party complete the audit process, say a CPA or an accountant, it's really important that someone who is at the upper level of the company, an owner or a manager, review the audit before it gets sent to the carrier. Again, though they may be very competent, they may not be aware of all of the day-to-day operations of the business. And again, misclassifications occur. I can't tell you how many times we've had to dispute audits simply because the person who completed the audit wasn't aware of where things should be classified, who was doing what, and then more expensive class codes are being loaded with payroll or sales, and the premium goes up. For subcontractors or independent contractors' proof of insurance, this is not something that you should be asking about at the time of an audit. The best way to do it is before they start work, they give you that certificate of insurance that you're going to need for the audit. And the reason why you want to do it before is because, well, in my experience, they don't have a lot of reason to want to give it to you after the fact. And they may take their time or may not give it to you at all, which is going to end up costing you more money. It's so important, and not only important, it is generally a requirement of the policy that all independent contractors and subcontractors carry their own general liability insurance and that they provide you with proof. If you ask for that before the work begins, they have a lot of motivation to get it to you. You can put it in the file, and come audit time, it's as simple as taking it out and including it as part of the paperwork. Now, you may be very organized, you may have reviewed the audit, you may have had all of the subcontractor certificates and put it as part of the audit process, and still, the audit comes in with incorrect numbers. It happens. Does that mean you've got to do that? Absolutely not. You have the opportunity to dispute the audit after the fact. So once the carrier has completed the audit and maybe even sent you a bill, you need to review what your policy now states with your trusted insurance advisor to make sure that it was what you sent. That way, you can find if they're overcharging you because they inadvertently misclassified some of the information that they received even though it was provided to them appropriately. Now, you've heard me talk about how the audit can increase your premium after the fact of the policy. Can it decrease? Rarely. So very few insurance companies actually provide a refund if you overestimated your sales or overestimated your payroll. It's one of the reasons why we tell our insureds to be conservative. We want to be close to the truth, but not past the truth. And the reason why is because if you're too below what you actually ended up having, you're going to have a huge bill due after the policy period all at once. Most audits aren't financeable because the policy term is already over. So the carrier wants the additional premium paid in 30 days. If you underestimated by a lot, you're going to be owing a lot all at one time. Not to mention, they're likely going to change your current policy to match the expiring one, so it feels like a double whammy. At the same time, you don't want to overestimate, because if they come back and you overestimated, generally the minimum earned deposit and premium endorsement says that they don't return the premium. It's a little one-sided, but they say it to you right at the front of the policy period. So it's important that you know it and that you are conservative in your estimates, just not too conservative. That way you may only have a little bit of a difference at the time of the audit. It's important to note that not all policies are auditable. Some policies are non-auditable, but there are very few of those, and they tend to be either more expensive or more limited in coverage because of the non-auditable portion of it. Most insurance companies want to make sure that the risk they're charging for is accurate based on to make sure that the claims that they pay out fit the premium that they're charging. It's important to note that the insurance company has the right to audit based on the policy contract, but not the obligation to audit. Basically what that means is the company picks and chooses when they want to audit a policy. Most insurance carriers have a rhythm to it. They'll do it every few years, maybe year 1 and then years 4 and then year 7, something of that nature. Some carriers will audit every year, especially on class codes that have strong ups and downs like construction. You see those general liability carriers often doing audits at the end of the year. Mostly what they're looking for there are those subcontractors because they tend to be a huge source of difficulty in claims and sometimes litigation when they're not covered because they didn't have the insurance, or when they were covered and they weren't charging the premium for it. So to be prepared for the audit, when you're getting the quote, have a conversation with your trusted insurance advisor about exactly what the audit process looks like for the carrier they're providing the quote with. The reason why is because depending on that particular carrier's methods, you might need more or less of the things that we're talking about in order to satisfy that audit requirement. And from experience, audits that aren't prepared for are cumbersome and long processes that usually end up leaving someone with a bad taste in their mouth. And that's not an experience anyone wants to have. So a good conversation at the beginning of the policy period really sets the expectation of what you need to have during the policy year, and when you get that audit letter, you're way better prepared to get the information out, get it done, and move on to the next thing. Keep your business running, keep your business going. Now, not all insurance is created equal. Some of the things we've talked about are general terms and explanations of processes, but not exactly the same for every company. So you need to see the exact terms and conditions of your policy in order to understand what you'll need in order to comply with the audit terms. Talk to your trusted insurance advisor. That's what we're here for. We're here to provide you answers to your questions and hopefully help simplify this process. If you don't have one, or you're looking for a second opinion, feel free to reach out to us at www.depozoinsurance.com. There you'll be able to text, chat, email, find more informative insurance videos and content, or you'll be able to start your quote right there online. Thank you.